Good afternoon, everyone. This is Henry, and as we get into tonight's free video, I thought you guys might find this helpful, maybe a little bit of a long form video as far as these that get published to YouTube. But it's just showing you here briefly the outline that we had for the trader call that we did today. So we're getting a panel of simpler traders together, and then for some of the annual members kind of joining in and just kind of going through about an hour of conversation among ourselves. I'm going to give you the recap of this and then again just kind of read off of these notes, but it begins with, what is your near-term outlook for the S&P 500? I believe that you have to divide that kind of a question into two parts. So the first part of it is just movement into Friday. Right, we have Thursday and Friday, 2 more days of trading this week. And unless the wheels just totally fall off or something comes up that I am just not seeing, I am targeting 4101. You could call it the double O to make it the even value, but it's just to say that you've had this huge area of resistance from swing high to swing low, and that 618 retracement has really proved to be a wall of resistance. But if we can get up through that about 40-30 level, I think you have another 70 points into the upside. Then, if you can see that play through Thursday into Friday, and maybe it even takes into Monday, you know, I don't know the exact timing, but if you could make that 4100, then it would just be the perfect spot to turn back lower and head to this 4000. You know, 4,000 is a huge strike. There's a lot of hedging activity that'll go on here and then also in the cash index at that same psychological value. So, you know, run up, get everything nice and bullish, suck it back down ahead of FOMC. So that's going to be due out on Wednesday. And that is the path that I'm loosely looking for over the course of the next week. So then we get into the next question that says, what are you on the lookout for to convince you that equities have bottomed? Well, you know, calling a bottom is a little bit like we don't need to get that far ahead of ourselves, but just to say, you know, because we've had so much of a rally already. But some of the biggest things to focus on here are, one, can the dollar continue to maintain a path of least resistance that is moving lower? As long as the dollar stays under pressure, I believe that will help equities push up. And then also looking into 10-year yields. So this has been another big part of the dampening of the growth story when those 10-year yields were just on fire. Well, now we're coming back to test this, you know, roughly about 3.4%. And I think at a minimum, it needs to test the 200-day simple moving average. And then if you don't find support there, you could get down into the 618 retracement of the major advance. So inside that bullish equity roadmap, I'm going to be watching the dollar and 10-year yields. And I think those have been helpful correlations. Some of the other questions here, you know, do you believe that volatile conditions will continue in the markets? Absolutely, right? I have no reason to think that we're going to suddenly enter some type of a dormant period. You know, 100-point swings in the S&P have kind of become the new norm. So leaving myself open to those ranges, I think has great opportunity. And then as far as what is your favorite trade or setup right now, it has got to be gold. And gold is really unique. You'll notice here that if we look at it in GLD, I really began the pursuit of this for myself back in 2014, because trading options on GLD, you know, maybe I just didn't have the patience for it, or maybe the market wasn't quite right. And let's of course also be very clear that for the better part of 5 or 6 years, that investment did nothing. But then when it finally kicks up, you know, you've got those coins stuck away in storage, and then, you know, not quite a double, but it's a pretty good move as far as that is concerned. So what I encourage traders to think about is something like this. So the certified, you know, Buffalo coins and anything like this, but I really find that these, you know, they carry a little bit more of a premium to them over spot, but they will tend to maintain that premium. And it's something where, again, this is not going to sit in your brokerage account. So it's kind of out of sight, out of mind a little bit. You pick those up, you know, as you can and kind of build that collection up. And then ideally over the course of the next 3 to 5 years, And it may not take that long, but I really do like telling you to pick it up through those coins, because what if the futures, and you can look at it in GLD at the 200 mark, but what if we need to spend some time under 2,000, right? I really don't know if that's going to be resistance again, or does it just burst through it? So if you buy those coins and you take a hit on them for a month, 2, 3, whatever it may be, as that resistance proves itself, then I would just keep buying more of them. I would not consider myself wrong until we get a monthly close below 6. Interesting to see that at the 1618. Obviously not a Fibonacci proportion, but all the same, 1618 is that swing low that I would consider myself wrong below. And then I just want to sit on those looking for this squeeze to do something similar like what this squeeze did. So that's a quick recap of what we discussed this afternoon. I hope you find some helpful themes in that to enhance your trading. You guys have a great rest of your night, and I hope to see you in the next free video. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.